History has shown a trend that has destroyed all of the world's reserve currencies. Not all of them, but all of them. The global trade was controlled by Portuguese real about 8 decades before collapsing. The Dutch guilder ruled for 8 decades until collapsing. For 105 years, the British pound was in power, then passed away. They all adhered to the same 7 phases. Each thought they were distinct. Everybody considered their money was irreversible, and both were incorrect. The US dollar became the global reserve currency. Money in 1944. That was 81 years ago. Additionally, as of 2025, the dollar is in stage 5 of the identical 7-stage pattern. This isn't a prophecy. This is math. A scene that has been out 4 times in 600 years. And the sole inquiry that counts is, if we have the intelligence to see what's forthcoming or enough conceited to feel that things are different this time, permit me to demonstrate the 7 stages in the pattern that each reserve currency must go through, and the precise location of the dollar right now. Prior to going through the phases, you must comprehend what a reserve is. In reality, money is. It's not merely a robust currency. It is the money that the central bank of various countries reserves, the amount of money used to price worldwide commodities, the money that it is used to represent international trade. Being the reserve currency means that your money is needed by the nation. To purchase oil, they require your money. To resolve trade instabilities, they require your money. For retain secure assets, they require your bonds. This results in what is known as extravagant privilege. You are able to print money and export it to purchase actual products. To make money, nations must manufacture things. Your money. You can conduct an infinite number of trades. Deficits since other countries must save up your money for emergencies. Lower interest rates are available for borrowing because the demand for your bonds around the world is structural rather than arbitrary. Being the ultimate reserve currency is economic weapon. Empires fought for this reason. To do it, and the reasons behind their collapse when they go crazy. Here are the 7 phases. Additionally, as we examine them, you will be able to see our exact location. The stage, first, the trade route and military supremacy. Command. Each reserve currency starts, similar to the overpowering military authority that governs important trade, ways, rather than merely possessing a powerful military, managing the routes that international trade occurs. Portugal accomplished anything in the 1450s. Extraordinary. They became experts in oceanic navigation, while other European countries were still embracing shorelines. Openly, Portuguese sailors were crossing seas. The Cape of Good was rounded. 1488, Hope. This created a maritime path to Asia that eschewed the Ottoman Empire, dominated land routes, and they militarized this benefit. Portuguese, the Indian Ocean was controlled by warships, the Atlantic and the South China Sea. They constructed stronghold trade posts at strategic choke points, Malacca, Goa, Macau, Morocco. These weren't merely ports. They were strongholds with weapons where Portuguese cannons dictated who could trade and under what conditions. If you desired, you interacted with spices from the Moluccas. Portugal, if you were interested in trading with, you needed approval from Portugal, India. They levied customs, levied levies, and captured vessels that attempted to evade their system. This military monopoly on commerce routes caused the Portuguese to reel the money that was important. Shopkeepers throughout Asia, Africa, and Europe required reals to carry out business in Portuguese-controlled waters. It turned into the money of global trade, not because it was supported economically or by gold, superior since it was supported by cannons. The Dutch did the same. 1600s pattern. The Eastern Netherlands, the India Company was more than a business. It was a military force. It had its own navy and army. When it was at its height, the Volk possessed 20,040 vessels, troops. Portuguese were subjugated. Trading posts took over the Spice Islands. Amsterdam was founded as the hub of international trade. Dutch vessels controlled the Atlantic, the Baltic, and the ocean in India. If you desired to trade, you required guilders and money of the authority that ruled the oceans. In the 1800s, Britain perfected this model. The Royal Navy had, at its height, greater number of warships than the next 5 countries combined. The seas were governed by Britannia. It wasn't poetry, it was true. The British dominated Gibraltar, the Suez Canal, Singapore, the Malacca Straits. Each and every crucial choke point for international trade was under British rule. The pound sterling emerged as the world's currency, due to the fact that British naval might made it unfeasible to carry out international trade without it. The United States attained the same standing following World War II, not only by possessing a powerful military, but by managing the world infrastructure for trade. The United States Navy controls all oceans, 11 planes, combat groups of carriers, greater than the entire world. The US has bases or is in control of almost every crucial point of bottleneck for trade: Hormuz, Malá, Babel, Mandeb, Suez, and Panama. This is not about protecting America. It's regarding regulating international trade, preventing international trade in order to operate without American acceptance. That is the military's first stage. Control over trade routes. The dollar accomplished this in 1945 and continues to, today, verify. Massive transaction in stage 2. Surplus, the buildup of worldwide riches. Once trade channels are under your control, you begin to amass wealth from the remainder of the world, not by stealing, through beneficial trade. Portugal conducted a huge trade in the 1500s. Surpluses. They purchased silk, spices, and Asian porcelain made with gold and silver. However, they offered European products for sale, African slaves, fabrics, and weaponry at massive markups. The trade balance headed for Lisbon. Portuguese vessels brought back a lot of Asian products that sold for 10 times their purchase price. This Lisbon surplus made it one of the Europe's richest cities. The Portuguese crowns earned from commerce were so substantial that they provided funding for the whole government without imposing taxes on a large domestic population. The Dutch did this even more in the 1600s, methodically. Amsterdam emerged as the world's warehouse. Asian goods, Africa, and the Americas all passed via Amsterdam. The Dutch made a cheap purchase in one market, sold well in another, and caught the spread. They were not only traders, they engaged in arbitrage on a worldwide scope. The excess in Dutch trade was so big that Amsterdam was full of riches. The canals that bordered with mansions, the merchants of the city, wealthier than many rulers in Europe. Britain operated the biggest trade in the 1800s. Excess up until that time in history. They exported produced items, ships, steel, machinery, and textiles to the entire world. They brought in raw supplies from abroad, rubber, tea, and cotton at costs determined by British consumers. The conditions of commerce were London dictated. The surplus accumulated. Britain became the richest country on earth. The financial area of London handled more money than the others, Europe as a whole. The US had the most striking trade surplus in history from 1945 and 1970. Following the world, America was the only significant industrial strength with undamaged infrastructure. Asia and Europe were rebuilding. The United States exported equipment, consumer items, steel, and cars to the world. The surplus in trade was such, large enough for cash to pour into overseas central banks more quickly than they could, recycled. Gold reserves in the U.S. increased. Fort. Over 20,000 tons of gold were in Knox's possession by more than the remainder of the 1950s, the entire world. This is the second stage. Enormous surpluses in trade, the increase of wealth worldwide through beneficial trade. The dollar accomplished this between 1945 and 1970. However, this is where the pattern starts to change because stage 2 is short-lived. Eternally. Finally, the reserve currency country shifts from manufacturing products, from exporting to consuming, from running surpluses to importing, running deficiencies. At that point, stage 3 starts. Phase 3, reserve, formalized currency status, the tipping point. Eventually, the world makes what is already true official. They formally accept your money as the holdback. This is the pinnacle, the time when maximum strength. For Portugal, this took place in the early 1500s. European countries and Asian traders formally acknowledged the genuine as the main money for cross-border exchanges. Trade was denoted by written treaties, in reals. It became the norm, for it took place in the middle of the 6th century with the Dutch. The guilder became as the preferred medium of exchange for contracts that are made abroad. Bills of guilders were used to write the exchange. Even the British East India Company made use of guilders for some transactions due to the financial markets in Amsterdam were the world's most liquid. For the United Kingdom, it took place during the Congress of Vienna following the Napoleonic Wars in 1815. The pound sterling was acknowledged openly as the world norm. Global trade agreements, loans, and treaties, they were expressed in pounds. The gold standard, which was embraced by most countries, was essentially a pound standard due to the rules were under British supervision. Regarding the United States, it took place at 1944's Bretton Woods. 44 countries met the New Hampshire and formally consented to make the reserve currency of the world is the dollar. Other money would be based on the dollar. Gold would be pegged to the dollar at $35 for each ounce. The World Bank and Monetary Fund were designed to oversee this system. It was the clearest formalization of reserve status in the past. However, this is things about stage 3 that no one tells you. This is the highest point. This is just as good as it gets. Due to the fact that official reserve status produces its own seeds, devastation, when you're the reserve, the world requires your currency more than your products are needed. Thus, you cease manufacturing products. You begin bringing in, reversing the trade excess, creates a deficit, which then turns into enduring. We refer to this as the Triffin conundrum. In honor of economist Robert, it was explained by Triffin in 1960 for everyone to have access to enough dollars. For trade and as reserves, the U.S. must run deficits in trade. The U.S. needs to send bucks overseas. However, running indefinitely, shortfalls reduce the worth of the money. You cannot unable to be both of the world's reserve money and keep a robust balance of trade. In terms of math, not possible. Thus, any reserve currency. When it gets to stage 3, the slide in the direction of stage 4. Phase 4, living beyond one's means and deficit spending. The inversion, the pattern is found here, becomes unchangeable. The reserve currency nation ceases to generate wealth and begins eating it. Portugal observed this in the middle of the 15th century. The surplus in trade vanished. Rather of exporting products, everything was being imported into Portugal. Grain from Flanders, fabrics from Sicily, produced goods from all throughout Europe. They used gold and silver to pay for this, from Africa and Brazil. However, they weren't generating riches. They were investing money amassed in the past. The spending of the Portuguese crown skyrocketed. King Joan III lavished a lot of money on palaces, the royal court and churches, military. The cost of keeping the empire running was high. Resources. Here's the secret. They failed to recognize the issue since the money continued to flow. As long as the Brazilian gold continued to come in so they could keep spending. However, the gold was limited, and they were not constructing anything productive with it. They were eating. In the 1700s, the Dutch did the same. Trajectory, following a century of commerce. Surpluses, making the Dutch net importers. Due of its richness, Amsterdam's citizens at ease. Why work in factories when you can make a living? Accumulated wealth. Dutch capital changed from manufacturing and trade to money. They started working as bankers in Europe, loans to other countries rather than manufacturing products. This produces profits, but it's not productive. It's passive income. Expansion. The trade balance went the other way. They were more likely to import than to export. They compensated for it by selling off accumulating riches. Early in the 20th century, Britain confronted the same reverse. By the year 1900, Britain was running deficits in trade. They brought in food, raw resources, and more manufactured items. They covered the cost of this with profits from investments made abroad. Investments made over centuries of amassed riches in mining, railroads, and businesses throughout the empire. The income from investments was massive, yet it was removing wealth generated abroad rather than fresh wealth at home. British manufacturing fell. Factories that were in charge of the Industrial Revolution, close or lagging behind the United States and German rivals. The deficit in trade grew year, surpassing their means funded by the sale of previous assets. The U.S. moved into the fourth stage in 1971. At that point, the trade surplus turned back into a deficit for good. The deficit was increasing in the 1980s, quickly. The United States, by the 2000s, was maintaining the biggest trade deficit in $800 billion a year throughout history. The U.S., many more imports than exports, electronics, consumer items, cars, fabrics, everything from overseas. How is this funded? By the printing money, exporting dollars, and trading it for actual products. This only functions because the dollar is the reserve money. Other countries require dollars for trade and reserves, so they acknowledge them. However, this is living beyond, implying that you consume more than you generate. Additionally, it follows the same pattern as before, the demise of each prior reserve, money. Currency at stage 5, debasement and printing of money, the desperate action. When deficiencies start to unaffordable, when you are unable to borrow sufficient to cover expenses, you debase the money. You create money. Portugal, this was done in the 1550s, dealing with deficiencies. Despite dwindling earnings from trade, the Portuguese monarchy started devaluing the actual. They decreased the amount of silver in coins, produced more money than they was supported by metal. This led to inflation. Costs increased. Merchants started rejecting reals or requesting more of them for products. The buying power of the currency, power diminished. The actual by the 1570s was becoming less credible. Global retailers began favoring other money for commerce. The Dutch took this action in the 18th century. The guilder had been supported by a robust banking infrastructure and monetary policy that is conservative. However, in the middle of the 700s, the Dutch government was taking out large loans to fund wars and sustain their empire of colonies. When borrowing became too costly, they started printing money and inflating it, funds to make up for shortfalls. The guilder's value dropped. It wasn't until the 1780s that longer the favored currency for global commerce. Britain denigrated the roar through two global conflicts. The World War. I made Britain print currency and briefly stopped using the gold standard. In 1925, they went back to gold, but at an rate of overvaluation which led to economic suffering. They were pushed off gold during World War II, forever. The pound by 1945 was drifting and becoming less valuable. Britain printed money to finance and reconstruct the welfare state. The value of the pound declined time and time again. In 1949 and 1967, each devaluation weakened global assurance. In the 1970s, the pound was not a reserve currency anymore. It was a local money. The United States reached stage 5 in 2008. The money crisis compelled the Fed to print money on an unprecedented scale. Earlier, quantitative easing, $3.5 trillion produced between 2008 and 2014. Then COVID struck, $7 trillion more, published between 2020 and 2022. The funds supply grew more quickly than ever before. Outside of times of conflict in American history, this is debasement of currency, not by decreasing the amount of metal in coins, but by increasing the amount of fiat money in circulation. And the result is the same. The value of the dollar, purchasing power decreases. The rate of inflation spikes. Inflation struck in 2021 and 2022, levels not seen in 40 years. The distinction between the US and earlier scale is the reserve currency. The dollar is worldwide. When the Fed prints, it exports inflation to every country in the world. Other countries keep an eye on their dollar. Reserves depreciate. Their dollar-denominated debt becomes more affordable for payback, but their American imports grow more costly. This phase is where self-assurance starts to erode, and stage 6 comes when confidence is lost. Swiftly. Loss of confidence in stage 6, while looking for substitutes, the shattering point. The world begins at this point, searching for ways out, when faith in the erosion of reserve currencies and countries start converting reserves to other options. The 1570s saw Portugal lose confidence. In the 1580s, international traders started requesting payment in Spanish silver, or Portuguese ducks are substituted with Venetian ducks. Reals, contracts for trade started, denominated in different currencies. Asian retailers who had taken reals for decades began to reject them, or requiring greater amounts to be accounted for humiliation. By 1580, when Spain annexed Portugal, the actual ineffective as a reserve currency. The annexation only codified what the markets had made up their minds. The Dutch guilders' trust was undermined by the 1700s. The British, French, and others. European nations started to possess more, their foreign currency reserves. In the 1780s, Amsterdam was no longer Europe's financial hub. London assumed that role. The guilder was utilized in local commerce, but not for significant cross-border transactions. Though gradual, the change was irrevocable. The confidence in the British pound declined, quickly following World War II. In 1945, Britain has massive obligations from the war to the US and other allies. The pound was overpriced, and only through loans from America. Britain in 1949 depreciated the pound by 30%. Global pound holders lost nearly a third of their worth overnight. Self-assurance fell apart. Countries started to change reserves in US dollars instead of pounds. By the 1960, the pound's portion of world reserves had decreased from more than 60% in 1945 to under 20%. The conversion from pound to dollar was finished in 15 years. The US currency is currently in the initial phases of stage 6 at the moment. The indicators are found all across. Russia and China started in the 2010s. Dollar reserves began to decline. Instead, they have been purchasing gold. Thousands of tons, the official gold of China. Since then, reserves have more than doubled. Tubing 8, although analysts informally think they have a lot more. Russia sold out almost all of its U.S. Treasury holdings following the 2014 sanctions. The BRICS countries, China, India, Russia, Brazil, South Africa, has been talking about alternatives to the U.S. dollar in commerce. They declared intentions for a BRICS in 2023. Money. Although it hasn't released yet, the fact that it is being talked about is important. Saudi Arabia, which has, since 1974, the price of oil in USD has the basis of the petrodollar system, started taking yuan in exchange for oil supplies to China in 2023. This ends a 50-year precedent. Globally, central banks are reserves that are diversified. The value of the dollar proportion of world reserves has decreased from 58% in 2024 compared to 72% in 2000. That is a 14 drop in percentage points. It sounds tiny, yet it's equivalent to trillions of dollars moved out from dollar assets. Gold, the yuan, and the euro have all absorbed the majority of this. Even tiny countries are lowering exposure to dollars. Thailand, they are talking with Malaysia and Indonesia, trade agreements that result in local currencies rather than US dollars. This is the start of the sixth stage. The globe looking for other options. Not because America is hated by them, because they perceive the similar trend that ruined each and every prior reserve money. Infinite deficits, depreciation of the currency, loss of purchasing power. They're not holding out for the seventh stage. They're arranging right now. Stage 7, substitution and collapse, the conclusion. At this point, the old currency is replaced by new currency, not through official consent, but through market acceptance. The world just stops utilizing the previous currency and beginning to use the latest. The genuine Portuguese was the Spanish silver peso took its place late in the 15th century. Spain has taken over a large America's silver mines, Potosi in Mexico, Zacatecas, and Bolivia. These mines generated more silver than the others, the entire world. Silver coins from Spain became the currency of choice for global commerce since they were plentiful, uniform, and supported by continuous manufacturing. The really depraved and deteriorating, unable to compete. It was rejected by merchants. The change occurred over a 20-year period. By 1600, the real didn't matter. The guilder from the Netherlands, the British pound took its place in the late 1700s and early 1800s. The British Industrial Revolution and naval domination made the pound the obvious successor. The financial markets in London grew more liquid and deeper than Amsterdam's. The pound had the support of British dominance in trade and manufacturing. About 30 years passed throughout the transition. Following the Napoleonic Wars in 1815, the pound was without a doubt the world's standard. Regionally, the guilder money. The British pound was swapped out by the US dollar between 1945 and 1960. Britain formalized the transition. Woods, albeit it took years to finish. Following World War II, Britain was bankrupt. The majority of the world's gold was controlled by the US and possessed the last surviving industrial base. The dollar was the only money that could act as a universal norm. The pound fell in a string of devaluations. When the pound depreciated in 1967, once more it was evident the dollar had completely swapped it out. What then takes the place of the dollar? Everyone's question is that, inquiring. And the solution is still unclear, since stage 7 is not yet reached. We're in phase 6, the hunt for options. However, history provides us with hints. The substitute currency arrives from the country that dominates the military over trade channels, an excess of trade, and ability to produce. At the moment, that's not just one country. China possesses the output and trade surplus, yet it has no authority over international trade channels militarily. The UN isn't openly adaptable. Capital controls in China stop it from being a real reserve. Money. You are unable to serve as the reserve. Money if people are unable to travel freely, cash coming into and going out of your nation. The second most popular reserve is the euro, money. However, Europe has profound structural issues, population aging, and lack of a united budgetary management, reliance on outside vitality. The production is in Germany, however, not in Southern Europe. It's a disjointed system. The price of gold is rising in appeal. Central banks are increasing their purchases. Gold more than it has been since the 1970s. Gold cannot be debased or printed. However, it is not scalable enough to manage trillions in regular business dealings. There is enough gold in the earth to support the amount of international trade. A few analysts believe there won't be a single replacement money, but a basket instead. Perhaps the IMF, unique drawing privileges, a basket of currencies, they become the norm. Also, perhaps technology makes something new possible. A digital currency that has a commodity backing it up, or algorithm. Maximalists of Bitcoin believe fiat will be replaced by cryptocurrency, but governments refuse to willingly plant financial authority to a decentralized system. The most probable situation is a untidy changeover, a time of multipolar currency rivalry, a number of regional money used for many transactions, blocks. In the Americas, the dollar, the UN in Asia, the euro in Europe, and gold for settling in between blocks. This wouldn't keep yourself tidy. It would be unstable, unpredictable, and painful economically. However, it's how changes take place when there's no obvious successor. Let me show you now. Why is this important to you? Why comprehending this pattern isn't scholarly. It is a matter of survival. When making a reservation, when currencies fall, it doesn't only influence governments, it destroys common people's wealth and savings. Portugal's decline in the late 1500s resulted in economic downturn during the Empire of Portugal. Merchants with the richness of the rails vanished. The 1700s Dutch slump destroyed the middle class in Amsterdam. Holdings of savings, guilders became worthless. Investments, guilders lost all of their value. The fall of Britain following World War II, a generation in poverty, British, citizens with pounds who had bonds issued by the government with pensions expressed in pounds. They were all defeated, buying power in relation to money, repeatedly depreciated. Additionally, the American collapse, it's taking place slowly. You are losing every dollar you own, purchasing power. Since 2020, the dollar has lost almost 25% of its worth via means of inflation. Your money saved, your retirement account, your wages, if it purchases 25% and is valued in less. Furthermore, this is only the start of phase 6. If the trend continues, if the dollar's trend is similar to for each of the earlier reserve currencies, the upcoming 10 years will see an acceleration, decrease, increased inflation, and greater loss of purchasing power. More countries are dumping dollars. Moreover, when stage 7 comes around, when the replacement takes place, a currency crisis, a time of collapse, the value of the dollar might drop by half within a few months. This occurred to the 1949 pound. It may occur to the dollar. What do you do then? Initially, recognize that keeping money is a danger rather than a safe sanctuary. The dollar is gradually losing its reserve status now, but moving more quickly. Diversify away from exposure to only dollars. This does not imply give up on dollars completely. You must dollars to live in the United States. However, don't keep all of your money in cash. Keep assets that maintain their worth throughout. Money, property, and productive, companies and goods. These are held value independent on the type of currency utilized. Second, observe the signs of phase 6. Keep an eye on the central bank reserve information. If you observe declines that are accelerating in dollar reserves, which is proof the changeover is accelerating. Observe accords on trade. If big countries begin completing transactions in different currencies, it is an indication. Keep an eye on the price of gold. If surges in gold indicate that the world is escaping fiat money in general. Third, realize that this has nothing to do with politics. It doesn't matter if you favor or oppose American policy. It's math. The identical math that destroyed the guilder, the true, and the pound. All reserve currencies adhere to the same 7 phases. Additionally, the dollar is entering stage 6 from stage 5. The pattern is indifferent to exceptionality. It is indifferent to economic size or military might. It is concerned about debt, deficits, and degradation. By those standards, the United States is precisely according to the script. Let me show you something that ought to frighten you. The chronology, for 8 decades, the Portuguese real was the reserve money between 1450 and 1530. The Dutch guilder ran from 1640 until 1680, 1720. The British pound was worth 105, 1815 to 1920. Every coin lasted between 80 and 110 years or so. The US, in 1944, the dollar became a reserve currency. That was 81 years ago. We're at the typical lifespan, and we're displaying all signs of a late-stage deterioration. Large deficits, depreciation of the currency, a decline in confidence. Look for options. According to the pattern, what comes next? Stage 7, replacement. Here's what's different this time, though, and it's so different here. This time, the customary hallucination is different. All prior reserve currency collapses was local. When the real one fell apart, Portugal's trade was impacted. Partners. When the guilder fell apart, it impacted Northern Europe and Amsterdam. The pound's decline had an impact on the Commonwealth and Britain. However, when globally the dollar sinks, every economy has a dollar. Every trade, every central bank transaction, the cost of all commodities, oil, wheat, and gold are both valued in US dollars. When the dollar is no longer a reserve, there is no aspect of the world economy that isn't impacted. This indicates that the changeover will be more disorganized than any shift before. No obvious replacement is available to take on the role. The dollar scale, debt worldwide, more than 70, with just trillions in bonds. A decline in the dollar causes defaults everywhere, each continent. Developing markets that dollars borrowed won't be able to repay. Businesses that issue dollars. Bonds are going to go insolvent. Even developed countries that use the dollar. Reserves will visit their central bank. Balance sheets collapse. The systemic risk is orders of magnitude greater than the collapse of the pound in 1949 or 1780, as soon as the guilder fell. This isn't merely a change in currency, it's a reorganization of the entire world monetary system. Additionally, restructurings are never seamless. They're unpleasant, disorderly, is detrimental to current prosperity. Let me be absolutely clear about what I'm not stating. Not that the dollar will collapse the following day. I'm not referring to the US will turn into a failing state. I'm not advising you to sell in a panic, everything. I'm trying to suggest that there is a pattern. 4 of the 7 stages, historical instances as well as the US dollar, is presently at the 5th stage going into phase 6. According to the timetable, we have perhaps 10 to 20 years prior to stage 7, perhaps less if the change speeds up, possibly much more if the US can break the pattern in some way. However, shattering the pattern needs something that doesn't prior management of reserve currency. It needs the deficits to be reversed, halting the production of money and rebuilding ability to produce. These are not merely policy decisions. They are politically nearly impossible since they need pain in the near term for stability in the long run. Democracies also don't vote for suffering. They cast their votes for stimulation, comfort, and, to avoid making difficult decisions, print money. Thus, the pattern persists. Phase 6 accelerates to the 7th stage. Additionally, those who comprehend this position themselves appropriately, they diversify. Out of assets worth only dollars, they have actual resources. They keep an eye on the indicators. Additionally, after level 7 is reached, they are not caught when replacement occurs, holding a crumbling piece of cash. They possess assets that uphold value in different currencies. This is what Portuguese traders who observed the real crumbling took place. They changed to Spanish silver. This is what the Dutch. When the guilder fell, bankers took action. They relocated their fortune to London. This is the actions of the British elite following world. They converted fortunes to dollars during World War II and assets. And this is what intelligent money is doing at the moment. Not everyone at once, not in a panic, but methodically, discreetly over many years. The death pattern of reserve currency isn't a conspiracy. It is a cycle of history, recorded throughout the course of 6 centuries, 7 phases, 4 different currencies, and now a 5th. The sole query is if you will view it before it's finished, or if you are going to be the liquidity that distributes riches to the recipients. The trend is obvious. The chronology is obvious. The dollar is currently at stage 5. According to history, stages 6 and 7 come next. Probabilities are more likely than possibilities. Almost certain. Here's how. Reserve currencies expire, not with invasion or disaster, with math. Slow, then quick. Disregarded, then indisputable. Additionally, by the time everyone can see it and the change is finished. If this altered your perspective, the world economy, the dollar, and what's approaching, you're beginning to observe the pattern. It played 4 times. Out. 80 to 100 in 10 years, 7 phases, and right now it's happening once more. If you wish to follow stage 6, subscribe as it happens.